Hey, how's it going, everybody? Mike Weber here, your Los Angeles real estate broker, and I'm back with your real estate market updates for the Los Angeles area. It's been a while since I did my last market update video, and I actually had a project going for a while that was really absorbing pretty much all my spare time, so I just didn't have time to do these videos. But I want to take a second to thank those of you that reached out just to check on me, make sure I was doing okay, and also to let me know how much you appreciated me making these videos. So I'm going to continue making them and probably expand at least the YouTube channel a little bit and start doing some videos on finance and related matters, as well as more in-depth stuff around real estate locally, things about wealth building, and just other interesting topics I think that you guys will enjoy learning about in terms of real estate in general. So again, I'm glad to be back and excited to get started. So let's go ahead and jump in and see what's happening here with real estate in our area. All right. So first off, before we really get started, I want to just show you guys what's been happening with mortgage rates. And mortgage rates are really based off of the 10-year Treasury, government Treasury rates. So we're looking here at Fred, and they've published data on the 10-year. And as you can see here, rates obviously started to rise, in 2020 all the way through today. But in the last couple of years, they've been kind of range bound in a range of, say, between 4.86 and 3.68. So about 1% either way. For the last couple of years, they've just been kind of trending up and then down and up and then down. Now, the interesting thing about this is that really it's the 10-year rate that influences mortgage rates. So mortgage rates are going to be a couple percent above the 10-year Treasury rate, and mortgage rates are based on the 10-year Treasury rate, but they have to include things like a premium or a spread for risk, for expected inflation, and for unexpected inflation that may come about, as well as other risks that pertain to the particular borrower. And what we'll see is that some of these charts are really almost like the inverse of the interest rate chart, because really interest rates are heavily influencing what actually happens out there in the market. One other point that I think is important to make is if you look here, really for the last couple of years, rates have kind of traded in this range, as I said. And so obviously people thought rates were going to come down, I think, quite a bit sooner, which initially was causing a lot of buyers to want to wait and hope that interest rates would be lower if they just waited 6 months or a year, as well as a lot of sellers to wait a little bit longer, hoping that rates were going to come down. So that way, when they sold their place and needed to finance the next place, their rates were lower. But obviously that hasn't happened. And I think there's a pretty high probability, given all the inflation that we've been having, that won't happen. In fact, it's very likely that rates will go higher and stay higher for much longer, maybe years, maybe 10 or 20 years. Obviously, it's impossible to say what's going to happen, but it's a very high likelihood that something like that could happen. And so for the people out there that have been waiting and hoping that rates are going to come down, one thing you can do, if you're finally at a point where you need to take advantage of the market and do something, is you can get pre-approved with a lender and just carefully watch these 10-year Treasury rates. And again, the mortgage rates will be a couple percent higher than what you see for the 10-year Treasury rates. And when they come down again, if they do, to one of these lows, you can just lock in a rate, and that'll save you maybe 1.5%. So for instance, instead of, say, locking in at 8%, you might be able to get down to 6.5% or 6% if you're able to lock in when rates trend down, like to where they were on September 16th, 2024, they were at 3.63%. So that's something you can do. And then, of course, if rates end up coming down even further after you purchase, you can, of course, refinance and then get an even lower rate. But if you have to move, you need to buy, you want to buy, you don't want to wait any longer, that's something you can kind of do and watch this and then try to take advantage of it when it's favorable to do so. But now let's go ahead and look at what's happening in the market. And we'll look here at Los Angeles County as a whole. Obviously, if we go, city by city, the data moves around and is too volatile to really give us much information. But if we look at the county as a whole, that really gives us a general idea of what's been happening with home prices. And look what we see here. I mean, really, since 2022, we've kind of trended sideways for really the last 3 years, and we really haven't seen any price growth to speak of. In fact, it dipped down for a while. That's probably when rates were really high. And then as rates have kind of gradually subsided, come down a little bit, we're seeing home prices, come back up a little bit. But overall, they've been pretty stable over the last couple years. And that's obviously a function of the higher interest rates that buyers would need to pay to be able to buy a home. Moving on, we'll just quickly look here at the South Bay Association of Realtors. I'll zoom out here to the 5-year chart because I think this really shows us a bit better what's going on. And again, this mimics the Los Angeles County chart. We see that prices have really just traded sideways for the last 3 or so years. We haven't seen really any price growth to speak of. Of course, if you zoom out to, the max chart, which looks like it's about, 17 years or something like that, prices, have gone up a ton over that time period. But of course, for the last, 3 or 4 years, they've really traded kind of in a range and just kind of went sideways. So again, not much price growth, obviously, because of these higher interest rates. Moving on, if we look at closed sales, this is where we're kind of seeing the inverse chart of the interest rate chart. And so as interest rates have really risen, of course, the number of sales that are actually happening has gone down. And I mean, if you look back here at 2021, we were at 7,161. And now as of today, we're at 3,577. So about 50% drop in the number of sales that have taken place in Los Angeles County. And again, this is directly correlated or tied to the higher interest rates in the market. If we look at pending sales, kind of the same thing we're seeing. However, this gives us a little glimpse into probably forward-looking closed sales. And we see here the trend is downward. So even though rates have come down a little bit, we're down here at 2,517 pending sales, and we're already in April. So not a good sign. We're down 40% compared to a year ago, and rates have actually probably come down a little bit in general. So again, not much taking place out there from a pending sales standpoint. If we look at month supply, this gives us a lot of information as well, and it shows us that not only are pending home sales falling, but at the same time, the supply of inventory on the market is rising. So what's happening probably here is that we had many years where sellers and buyers, everybody was thinking that, rates are going to come down in 6 months or a year, I'll just wait. But of course, there's always people out there that actually need to sell their home. And so I think a lot of these sellers that were waiting, that were on the fence, now are concerned, hey, maybe rates aren't going to come down. We can't wait anymore. We have to do something now. And so we're seeing a lot more of those homes getting listed on the market finally. And I think the reason why we didn't see prices go down initially was because there wasn't a lot of supply and there was enough buyers that had cash or enough cash to just buy cash, or maybe the interest rate wasn't a big deal for them to absorb those small number of homes that were getting listed. But of course, now there's a lot more homes being listed. There's very likely not enough buyers in a position to be able to buy these homes. So in any case, 34.5% increase from a year ago. We're up at 3.9 months supply. Not a huge number, from like a historical standpoint, but certainly a big number considering where we were for several years with extremely low inventory in Los Angeles County. And lastly, we'll take a look at active listings. And this is very similar to what we just looked at, the supply of inventory. And we're up here, 35% increase year over year, 14,481 active listings currently in Los Angeles County. So what this means is there's a lot more people that are looking to get out, looking to get sold, a lot more options for buyers, which is a welcome change of pace compared to what it was for many, many years. It's easier to get an offer accepted. There's less competition. So all of these things are good signs for buyers. Obviously, if we continue to see these trends, such as high interest rates, increasing supply of inventory, and this stays this way for a year, 2 years, 3 years, or much longer, this could be the canary in the coal mine, if you will, of falling real estate prices. Obviously, what'll have to happen is if a seller really wants to sell their home, they're going to need to lower the price. And as they lower the price when their home sells, that becomes the comparable that appraisers and agents and sellers and buyers are going to be looking at to determine how much they should pay for the home that they want to buy. And so obviously what happens is the prices start trending down, and that's how we see that shift finally, for a long-term change in trend where we see falling prices instead of rising or stable prices like we've seen over the last couple of years. All right, well, I'm happy to be able to have shared this information. Do me a favor, if you know anybody or you yourself needs help with real estate here in the Los Angeles area or the South Bay, definitely let me know. Have them reach out to me or reach out to me. I'd certainly like to help no matter what it is that you need. And yeah, appreciate you guys watching the video. I look forward to doing the next one. If you have any thoughts or anything you want to share with me or any suggestions for future videos, go ahead and leave those down in the comments below. And we'll see you soon for the next video. Take care.